Apes and Apettes, welcome back to the channel. We have a lot of interesting developments to get into here in this video, and as you can see, AMC bounced off of the bottom today at that low of $16.11 per share. So did the S&P 500. So we're going to get into exactly why that happened, what to expect throughout the rest of the week, and all of the data and the news that you guys need to know. So let's get into it. Hit the like button for me, as well as subscribe to the channel, and let me know in the comment section, what do you think is going to happen throughout the rest of the week. Make sure to also get yourself some free stock. Not too often you can get free money provided to you by Moomoo, Webull, and Public. Link down below in the description of this channel. You help support the channel as well. And if you guys want access to all of my trades in real time, check out the link for the pinned comment down below. So let's talk about exactly what is going on, why the markets did bounce. And if you guys are unaware, that is because young Biden came on and gave a speech. He was about an hour and a half late, so I don't know what was going on with that, but he eventually did come on. And it says right here, these are the new sanctions President Biden announced against Russia. In quotes, we're implementing full blocking sanctions on two large Russian financial institutions, VEB and their military bank. We're implementing comprehensive sanctions on Russia's sovereign debt. That means we've cut off Russia's government from Western financing. It can no longer raise money from the West and cannot trade in its new debt on our markets or European markets either. We'll also impose sanctions on Russia's elites and their family members. They share in the corrupt gains of the Kremlin policies and should share in the pain as well. We've worked with Germany to ensure that Nord Stream 2 will not move forward. So no specific sanctions on oil, and the markets, they were pricing in a lot of hawkish verbiage heading into this. That's why the markets did sell off under that key level of 430, and then the markets realized, hey, that's not as bad. We're being pretty weak on Russia. Hey, we're gonna bid the markets back up. Trading algorithms went through a fit, and you're seeing these very large bounces. So now if we close today and then after hours, stay above 430 on the SPY, it looks like we can have a bullish rest of the week, but it is going to be very, very volatile. We have seen a huge range today at the peak at $435 to the low at $425. So that was a 10-point move from bottom to the top. Now another, what is that, 5 or 6 point move from the bottom now to where we are right now. So a lot of volatility. Expect the volatility to stay, and Russia-Ukraine headlines are going to dominate the markets and how we move from here on until we get more verbiage from the Fed. Because keep in mind, this is like, if you want a weird analogy here, this is like the corn and mashed potatoes mixed with the gravy, right? This is the side dish compared to like the turkey or the Hershey's pie or something on Thanksgiving. The Fed is the main dish. Russia-Ukraine is really a sideshow here. What that means is the Fed can crash the markets. Russia-Ukraine is not going to substantially crash the markets. You're not talking, going under 400 on the SPY, unless Russia did declare war on the United States or something, but that's not even in the questions. That's not in Russia's playbook as far as now. So there's your weird analogy. And just expect a lot of volatility. And why I am talking about the Russia-Ukraine drama show so much, I had a couple people like, hey, why are you even talking about this? Well, it's moving the markets. It's affecting our investments in our trades. And hopefully you guys are profiting from this just like we are. Linked down below in the pinned comment. But nevertheless, it's affecting you, can make you money or lose you money. So that's why I need to cover that here on this channel. I don't want to cover it. I wish I didn't have to. But in this case, I have to. So AMC is down about 8% currently, which you do see some back and forth moves. You're seeing some stocks that are up quite a lot, like DraftKings, and then you're seeing AMC down a lot. So there's not really a set range we're seeing for the day. Some are down a lot, some are not down as much. But even something like SoFi is down comparatively to where AMC is today. So it's not a terribly crazy move in my personal opinion, because AMC is not the only stock that is down this much, but still not a great day. Going down about $1.44 heading into the close today, but we are still in this key range. Let me pull this up. We're not quite at $15 per share, but I did say if we didn't close above $17.75, we were going back down to $15 per share. So that's probably what is going to happen as the drama show does continue to escalate. This is also another key level. You could say we might find some support around here, and that's also where we did bounce above today, and that's at about $16.25 roughly here. So that's looking good. Maybe if we can close above that, we might head back to that $17, $18 range tomorrow if we do see a big bounce. If the Russia-Ukraine situation does not escalate tonight, then you'll probably see a big bounce tomorrow, specifically because we were very weak on Russia and we did not impose really sanctions that are going to affect them all too much when it comes down to it. On another keynote, oil is approaching $100 per barrel. Historically speaking, every time oil has went over $100 per barrel, you have seen a recession. So that's a key indicator for a coming recession if oil does go over $100 per barrel. Keep in mind, anytime throughout history, it's went over 100, we have always seen a recession. As well as that, Biden authorizes additional U.S. forces and military equipment in Europe, which we're going to see a lot of that news, going back and forth. But you also do have Russia today that did get authorization from Congress. I mean, it's kind of like Putin says what, and Putin does what Putin wants. But nevertheless, Russia's parliament, whatever they call it. I don't even know if they call it Congress, parliament, whatever they call it. They did approve Putin's request to send additional troops beyond the borders of that eastern Ukraine region. So they're talking about a full-scale invasion of Ukraine. If that happens tonight, expect the markets to take a big hit tomorrow. But it's very hard to play this just because things are evolving very, very quickly. And Russia could, quite frankly, drag this out for a very long time if they want to. But they are also, like I said, ordering their people to leave their embassy in Ukraine. So some more escalation on that front. Just be mindful of the headlines that come out, where you are positioned, how you are positioned, and what kind of exposure you have, because things can switch just like that. And we're seeing a big range today, so I expect that to happen throughout the rest of this week. As far as the data you need to know around AMC stock, let's pull this up. Option order flow, 9% positive option order flow. 40 orders totaling $8.48 million. So that's also a reason why you're dropping today. A lot of artificial shorting in the form of puts on AMC for the day. Over the past week, 42% positive order value, 139 orders totaling $42 million. So definitely a lower day than where we are usually used to sitting at as far as option order flow sentiment. 20.88% short interest of free float, 109.15 million shares that are sold short, cost to borrow max of 2.73%, and that good old share utilization at 100%. That is definitely a good sign. Days to cover sitting at 2.29, also a good sign in my personal opinion. As far as what really matters to the markets, let's go ahead and refresh this. And this is something you guys should pay attention to. It's investing.com/central bank/Fed rate monitor, or just type in investing.com Fed rate monitor, and it'll come up this. You see, March 16th is the big meeting, and these are the basically what the markets are expecting for the rate hike increase. 66.3% of market participants only expect a 0.25% rate hike, where 33.7% of market participants expect a 0.5% rate hike. So the more this goes up, like we've seen in late January, if this starts to get skewed more to, people pricing in a 0.5% on March, you're going to see that pain in the markets. But for right now, we're definitely more on the dovish side. So that is looking good as far as a potential bounce in the markets. And we do have some major data that is going to be coming out here on Thursday. ISM non-manufacturing on Thursday. ISM PMI, that's the big one that the Fed also likes to look at. We do have, I believe, PCE this week. PCE prices quarter over quarter, and that is going to be on Thursday as well. Initial jobless claims, GDP growth rate quarter over quarter. So Thursday, that's going to be the big day as far as economic data is concerned. So do expect a lot of volatility as well on Thursday, and basically the whole entire week. As far as the Stocko tracker data, 4,800 calls that are in the money, 112,000 calls that are out of the money. So if for whatever reason we see some de-escalation on the Russia front, which does not look very likely at this current moment, we could expect to see some big moves to the upside just based off of this ratio here. It's all about the ratio. 4,800 calls that are in the money compared to 112,000 that are out of the money. That is a huge bearish ratio. If you see that switch, you could definitely see a lot of hedging that has to take place relatively fast because this is also a shorter week. So keep that in mind. On the put side, 16,000 puts that are in the money, 36,000 puts that are out of the money. So very low put activity as well for this week. And this is one of those oddball weeks. January 25th, not really one that a lot of people trade. It's not a major expiration really across the board. As far as the actual technicals, we are seeing the MACD is still bullish, but it is starting to converge and it might just go bearish here possibly tomorrow, I would imagine, if we do see another red day. Still well above this level at about $13.40. That's the low that we did hit. If we do come down and we see a strong escalation overnight or whatever the case is, $15 looks to be that strong support that we will see. If we do stay above, $16.25, which we are about 13 cents off of right now, heading into the close, we only have about 5 minutes left of market trading, then we could probably see a bounce tomorrow, but it all depends basically around the Russia-Ukraine baby mama drama. As far as the Bollinger Bands, we have now crossed under the 20-day simple moving average, which is not a great sign. We kind of gapped down under that today, and that might be fueling some of the algorithmic shorting that we are seeing today. So all in all, good time to buy the dip in my personal opinion, and the markets are selling off. That means we are getting closer to the MOAS. So you guys should be very much encouraged by what was said here in this video. Hit the like button for me, subscribe to the channel, comment down below what is your thoughts by the end of the week. Like I said, come join us in the trading community. We talk jokes over there, we make trades, we do it all. You can ask questions, linked for that in the pinned comment. Get yourself some free stock, links for multiple different platforms down below in the description of this video. Thank you guys for watching, and I will see you later on tonight.